Good afternoon, everybody. It is Sunday, March 3rd, and we are going to go over the CoT reports. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start off with the S&P 500 here. And a few things we can see is they trimmed a little bit of their position this past week. But we can follow their position builds from April and May of 2023, and then the markup that ensued, June to July, and again, the markup that ensued, the distribution, and then how to carry these levels forward. And this was the original position, the markup, add to the position, distribution came right down back into these positions, the inventory that these size traders had. Now they rebuild a position, markup, and then continuing distribution, markup, little distribution, and now we're seeing a markup again this week. We will have to continue to monitor this. It's a similar setup right now to last summer, so 50-59 quarter is going to be our level to watch for that, but we are breaking out on higher volume, which is more of a bullish signal. On the Dow, we'll dive in here. Commercials are the most short they've been and nearing a 3-year max short position. So we can see when they have gone long in the past, a few different times here in the last year. And unlike retail traders, when price gets outside of their position, they don't panic out. Remember that on the commercial side, this is a function of their business. So they have to take on some of these positions at times. But they also then have the resources, the data, and the skills that allow them to win the long game. So remember, the house will always win in the end. So last year, they built a position and price went lower, but they still won in the end. And you'll see that back here. Built a position, it came down, but they still won the battle, as they marked up price into the summer. Came back down, rebuilt another position, and then they distributed that into the end of the year markup into December. So this position from September, October, November was acquired in the 34,000 range and sold at 38,000. So a nice 10% markup. Now this is a short position they've been building. So again, we'll have areas that we have to watch, and we can take those levels, but those right now roughly are going to be 38,872. 38,369, and then 38,000 on the downside.
Bitcoin commercials sold some of their positions this past week, which makes sense as Monday and Tuesday we saw the spike. We have been discussing there's a position to sell. We are near all-time highs. This would be a nice headline for commercials to print. Hope some of you caught this either Bitcoin or other crypto coins or stocks like Riot or Coinbase. This week, we have been a very nice setup and again, following the money and bet with the house, not against them.
Probably the biggest one I'm going to be watching over the next week. And for our elite subscribers, I'll post a little more detailed analysis in our room. But the yen is a major factor to consider in the global environment. Carry trades have been very popular since the bear market in 2022. This ties into liquidity and debt servicing. So the finance minister in the last couple of weeks has said they would be willing to step in to prop up the Japanese currency in the foreign market in the forex markets. If that occurs, we're looking for liquidity to be drained from other assets. And we can see here that large speculators are the most short that they've been, which leads to commercials being the most long that they've been. Now, commercials will want to push the market to de-risk. This would squeeze out those speculators and lead to a liquidity pool from profitable assets. So you're talking about things like we just went over Bitcoin, but also the U.S. equities, the mega caps, the tech stocks. XLK will be one to watch. So as commercials are adding to their long position and they're nearing a 3-year max, we need to be aware of this headwind overall in the markets. And we can see here when we had the spike in 2022 to 2023, this is when the carry trade really kind of took hold. Everybody could short the yen. And as it's dropping, they can take the money they got from shorting and buy into tech stocks. So while the yen has been dropping, we've seen tech and S&P since that October low in January 2023 market start just rallying, and you're getting the clear opposite in the yen. But we have these times where they get these large positions and they bounce the market to de-risk. If we get that again, and as they're seeing inflation, they're seeing reflation in their economies, and again, they've been in a deflationary state, we will look for our bigger levels here, 67085, which was pretty much the high of the week. There was a really nice short there. That's going to be your sign for this to start moving. And if this really starts taking hold, just be aware of the potential headwinds this can create. The last one we're going to look at today is going to be CL. Again, most weeks there's not glaring trades on these, and so you have to be very selective on which ones you're going to bring into your trading for the week ahead. But as we've been mentioning for several weeks, that commercials have been near their least short position over time and in duration. They would want to push the market up to see to re-hedge at higher prices. So when you short, you want to short high and you want to buy low. So they have a small short position. They want to add to it. So they push the market up. They sell their physical product higher and then they re-hedge at higher prices. We've seen this carry through. And that's what we are looking for again. So we've been mentioning the last couple weeks since the beginning of February to look for a bounce to 80 to 82. And we just had that this week. Now, we don't swing trade this, and if you're interested in learning how to trade this, check us out. But this is the analysis we'll take in on our daily time frame to understanding what the highest odds moves are. And so remember, energy costs are a significant factor in household inflation. And if energies begin inflating, as we have seen the Hang Seng index turn, Japanese discussing ending NERP, and if the Fed were to cut rates, we could see oil back to 100 to 120 very quickly. So positioning is telling us they're going to want higher to re-hedge. We'll watch next in the 82 to 84 and then longer term in the 90 to 92. But we can tie all of these things together to see the bigger picture. The positioning of the commercials say they want to see higher, and that's what we're going to begin to watch for.
If you want to upgrade your trading the same way I upgraded the slides, check us out at Sticks Trading Academy for our classes and Discord room.
Thanks, everybody. Have a great weekend.